The macro outlook for Bitcoin is looking even better than it has been for the last couple months. With a break over the 30,000 yearly long resistance, could this be the trigger that results in a continuation upwards and an eventual bull market? In today's video, we're going to be discussing the next bull market, altcoin season, short-term price action, the macro technicals and structural analysis, and of course, so much more. Let's get into it. Okay guys, welcome back to the channel. Thank you for tuning into another video. I hope you're all having a fantastic day today. It is obviously amazing to see Bitcoin do so well on the higher time frames and break through that major $30,000 resistance. We're going to talk about the implications of this today, where Bitcoin could be going on the short term. We're going to give a macro update. We'll be talking about the 4-year cycle, the bull run, and of course, altcoin season. Before we get into it, smash the like button, hit the comment button, and of course subscribe to the channel, guys. We give you the most honest, reliable, and accurate TA on the market. If you've been following the channel for a long time, you would know we flipped bullish all the way down in this range between 18,000 and 16,500. We have reached our 30,000 target. We sold off our Bitcoin at around a 78% profit on our spot bags. We will look to buy back if the markets continue to look and show strength. We'll discuss that in today's video as well. If you want more information and you want to see more of our content, you can join us on Telegram. That will be the second link down below. We've got access to charts, updates, analysis, information, videos, more educational posts, and news events. If you're interested in joining our VIP channel to get trades such as this, you can see in our VIP channel here, 537 members. Exact entries, exact targets, exact stop losses, everything is detailed and laid out for you. You can get more information on that in the pinned comments. You'll get access to our VIP channel and our exclusive VIP group chat, a whole bunch of additional content, educational posts, videos, and of course, charts posted in there. Our entire trading track record can be found over here. Let's go ahead, guys, and get stuck into a video. We'll start off with the DXY, we'll start off with the market data and traditional markets, and then come over to Bitcoin. So starting off with the market data, how are we looking currently for the month? Bitcoin is so far showing a lot of strength. We're now 4 months into the year, every single month being green. Obviously, February being only very slightly green, but green nevertheless. So 7.48% for the April at the moment, up. We're seeing volume jump up a stupid amount. Obviously, this percentage over here is completely out of whack. We're up to around $111 billion in 24-hour volume. If I do recall, we're around 60 billion yesterday or day before, so up about 50% in volume over the last 24 hours. Again, this was expected. As we break through that $30,000 yearly trigger, we're going to see volatility ramp up. We're going to see volume kick in. We're going to see volatility rise. That was a major point of resistance and confluence on the higher time frame chart, and we'll come back to that in just a moment. So we are starting to see those indicators rise. We can see volatility on the 30-day has still moved down. And again, this doesn't adjust for the most recent price action. If we do look at the price action over the last 30 days, a lot of the price action was actually in this period here, where we start to see volatility dropping. We're seeing momentum and velocity drop. We're seeing compression after a large move up. So if we average out the volatility over this entire period, we're starting to see the 30-day period push from this side toward this side, and it is starting to delete the jump in volatility we had during this run up, and therefore the average 30-day volatility appears to be dropping according to our 30-day index, but in reality the volatility has actually increased, and we know the volatility has increased as we have seen increase in liquidations and increase in volume as we pushed through a higher time frame resistance. Going to a 60-day period, we can see exactly the same things occurred, but to a lesser extent, as it is still accounting for that massive rally we had from 20,000 to 28,000. So the volatility on the 60-day is very much still hanging on and plateauing as the price is rising according to our index. Looking at shorts and long liquidations, guys, over the last 24 hours, we have seen a whole heap of shorts liquidate as the price pushed upwards. We saw some longs sprinkled in between there, but primarily shorts have been liquidated. Moving on to the DXY. The DXY is at an incredibly important support. We had the CPI data, we had the PPI data come out, both of which came out better than expected. We had bullish results for both PPI and CPI, both core, year-on-year and month-on-month. This is a leading indicator that, of course, inflation is dropping and the Federal Reserve is more likely to pause interest rates, decrease the aggressiveness of their rate hikes, and eventually come to a pivot. This has resulted in the DXY seeing a little bit of a drop over the last 3 days, amounting around 2% to the downside, and now retesting the current lows it has been developed, or at least holding above, since April 2022. This is a massive point for the DXY, an incredibly strong pivoting point for the DXY, and if we do lose this level, this will be incredibly bullish for cryptocurrency, for stocks, and for asset prices. As we do know, the DXY dropping indicates money is flowing out of the dollar and into assets. Assets will continue upwards. So we are keeping a close eye on here, guys. If we do see a double bottom bounce here, we could see a little rally upwards, and we could see the cryptocurrency and stock market see a little bit of a retracement. However, if we do continue down, that is going to be a very bullish sign. So definitely keep your eyes on the DXY over the next couple days. I would say over the next week particularly. Moving on, S&P 500 is currently retesting that upper resistance. Now, if we go ahead and eliminate this rally toward the top side, which we'll come back to in a second, we do have a quite strong neckline of resistance represented by this gray box. This neckline of resistance has been holding now for around 349 days. So basically a yearly long neckline of resistance. Again, an incredibly strong point of pivot for the S&P 500. A break above this point will send the S&P upwards towards this resistance zone, where again, it could potentially reject toward the downside. We are looking at this here very closely now, as the DXY is at support, and the correlation between the S&P and DXY is much more strongly correlated in comparison to cryptocurrency in the DXY, as the S&P or usual indexes over there on the financial markets have a stronger degree of correlation as a primary correlation to the DXY, guys. So if we do see the DXY rally, we could potentially see a pullback towards these lower supports. However, it is definitely looking bullish on the higher time frames, right? We have been bullish on the higher time frames ever since we came down, broke out, and retested this low here. We have been a higher time frame uptrend, and if we start to clear these highs, we can expect the uptrend to continue. Looking at the Dow Jones, exactly the same thing, guys. We've been bullish on the Dow Jones ever since we came down and retested these local lows of this downward trending support line. We have seen a strong bounce. Again, we do need to see clearing of these highs over here for a continuation upwards. Until then, we do still have a little bit of resistance above us. We're not quite out of the woods yet. We do have a little bit of resistance and potentially pivot points over here. So definitely keeping your eyes on the charts over there. However, no doubt they are still looking strong as they have been. Let's go ahead, guys, and get into Bitcoin. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you could do so with the link in the description. Thanks for listening. And so, we'll start on this chart over here. We'll talk about what we're looking at for the trend. Then we'll go to the 4-year cycle. Then we'll talk about altcoin season. Then we'll talk about Bitcoin dominance. And then we'll talk about the short-term price action. And of course, we'll sprinkle in some macro analysis while we go. So currently, Bitcoin has broken upwards from 30,000. Going off our annotated chart over here, to keep it nice and simple, And again, keep it nice and easy to follow for all the new viewers, potentially some of the new people doing TA. We do like to annotate a little bit so it is easy to follow. We were in what we still are. We've been in a bullish trend, right, ever since we broke out around 18,400. This was our descending wedge formation on the larger time frame. The reason why this was bullish, and again, if you go back to our videos in December, in January, in November last year, we were talking about how the bear market was losing strength. We were talking about how the bulls were gaining strength and how we were going to see a macro reversal develop from this falling wedge, right? A falling wedge is a bullish structure. It represents decreasing volume, decreasing liquidity, decreasing volatility, and obviously with all of those things we have compression. If we have compression out of a downtrend, okay, we generally can identify that as a bullish reversal. We had our downtrending resistance here. This was our downtrending resistance line of our bear market. Okay, we had a massive descending channel formation. We had the falling wedge develop out of that descending channel. You can see it pivoted over here. So we had this falling wedge develop out of meaning it pushed out of the descending channel, and when it broke up, it flipped both the descending channel and that falling wedge reversal pattern, putting us out of the bear market. The bear market officially ended at that point, exactly like we said. We talked about this in all our videos many months ago, guys. A lot of you may have been new to the channel. A lot of you guys have been joining the channel in the last few months, so you probably didn't see that, but you can go back and watch those videos if you like. So we have been in a bullish trend ever since. Now, during this bullish trend, obviously the candles just don't go green always. We do have rejections, we do have points of weakness in bullish trends, we do have potential pullbacks. Now, just because we see pullbacks, it doesn't mean are going to see new lows. We've been saying the new lows are very unlikely, and almost I would say now new lows, the bearish case of new lows is basically completely obliterated. We'd have to see some significant shifts in the economy. Our economic drivers are turning more bullish. We'd have to see some significant negative news events to see any sort of new low come in. There's almost a 0% chance we do see a new low right now, okay? Looking at the higher time frame, we did have a point of possible trend reversal at that 30,000 to 28,000 level. This was, of course, our yearly low of the prior bull run cycle. You can see massive support over here in the prior bull run, over here again, and finally this pinching point before a huge crash toward the downside. So 3 points of massive confluence, massive support becomes massive resistance, and we have now officially broken above. So we have broken above the 30,000 level, and as you can see, above 30,000, we are macro bullish. This is a bullish reversal pattern. We were in a bullish trend on the weekly. We are now in a macro bullish pattern, a monthly bullish trend. Now, we do need to see a monthly candle close above 30,000 to get validation that this yearly long resistance has broken. We can confirm that going back to the 4-year cycle. Every single time we see a monthly candle close above the prior yearly low of the last bull run, you can see these red horizontal lines, monthly candle close over here, monthly candle close. We never ever see a monthly candle close below it again. Okay, assuming the same thing will occur around this time around, if we get a monthly candle close above 30,000, we are never going to see a monthly candle close back below 30,000 again. So that is going to be a very strong pivot point for the market and confirmation that the macro bullish trend has actually kicked off. We'll come back into a high time frame analysis in a moment. Moving on from there, guys, you can see anything above 20 to 25K keeps the bullish high time frame trend intact. Okay, this is macro, this is high time frame. Anything below 18.3K puts us into a macro bearish trend that could put us into a new low. You can see over here, macro bearish trend starts below 18.3K. A loss of the bullish trend begins below 24K, okay? And of course, we are in a macro bullish trend above 30K. So the little annotations over here to help you understand the biases and the trend directions you should be following according to the current price action and current zones we are sitting above or below. So do watch these levels, guys, okay? Let's go ahead and talk about the 4-year cycle. So a lot of people are saying, MegaWhale, is the bull run back on? Are we in a bull run? And to simply answer that question, again, I've answered it many times. We are not technically, by technical definition, in a bull run. Now, a bull run is not a macro uptrend. a high time frame uptrend or a macro uptrend is not a bull run. A bull run is a completely different thing. Yes, a bull run is when the price is going up, but it requires certain triggers to actually put us into, or to have the technical definition of a bull run validated. We are not in a bull run. What we are seeing is a macro reversal from the bear market lows, okay? Now this macro reversal from the bear market lows will very well extend and develop into a bull run, but to say the bull run is on now is misleading, it is potentially damaging, and it's just factually incorrect. And we're gonna go ahead and show you why it's factually incorrect. If we look at a few things, I'm going to go ahead and bring up a few indicators which we'll use in a second, particularly Ichimoku Cloud, and we'll go ahead and just remove that for 1 second. We'll come back to it in a sec. If we look at the date ranges of the 4-year cycle, we can see the red zone reflects the bear market, the gray zone reflects the reversal, and the green zone reflects the bull run. Okay, those are our 3 phases. We have bear market, reversal, bull run. Perfect. Looking at the date ranges, we can see the average bear market lasts between 13 to 12 months, so about a year. The average reversal lasts about 16 months to 17 months, and the average bull run lasts around 18 to 19 months. So, if we're looking at the date range trend, according to our date ranges, the bull run should only resume or start around March to April 2024. Now, this is where people get confused. It doesn't mean we can't see aggressive uptrend gaining massive percentages before then. We can definitely see a huge uptrend develop, a huge uptrend that does 100, 200% before the bull run technically starts, okay? And we've been saying this the entire time. You've been watching our channel. We've been saying all the way since back over here, we said we are going to see 200, 150% rally before we enter a bull run. If we look at the prior cycles, look at the yearly lows, look at the bull run bear market lows, take it to the monthly close on the bull run, we saw 228% before we entered a bull run. In this instance, we saw 215% before we entered a technical bull run. We saw massive rallies, guys, on both the 2016-17 and 2018-19, or should I say 20, before we saw that bull run really kick off. If we take a look at our Ichimoku Cloud, specifically the baseline on the monthly chart, you can see every single time we close a monthly candle back above that red line, a solid red line, that is when we're technically shifting momentum on the high time frame. That is when we're technically entering a bull run, okay? That will most likely occur around this date range. Now, I've mentioned before, there are certain things that could facilitate an early bull run, such as economic policy, social perspective, and obviously political decisions. These things can drive price action faster. They can also make price action shorter based on what is occurring around the globe. If you look at what triggers or what moves price action, it's usually political, economic, or social. Looking at the price action recently, economic policy, interest rates, okay, they've massively affected price action. Political decisions around, obviously, cryptocurrency regulation, FTX, all that stuff massively influences price action. And social perspective, obviously Bitcoin rallying based on the bank collapse was a massive incentive for the price action rally. So price action moves based on economic, social, and political policies. We use technical analysis and structural analysis to identify where the price can move to and what points lie liquidity in which the price can rally from or reject from. We use technical analysis to define the actual strength of the trend when doing our trading, so we know we're trading into or against strength/weakness. Looking at the time frames over here, guys, we can see one of the strongest points on the chart in terms of where volatility will pick up for Bitcoin, meaning with a bull run will really start to gain volatility, is going to be the break above the first high or the first bear market bounce. You'll call this a bear market bounce, a dead cat bounce, represented by the dotted line. When we break above that dotted line, we generally see volatility increase. And we know volatility increases because the amount of red candles to green candles significantly increases. The angle of the price action from the low to that dotted line, and from the dotted line to the high of the next bull run significantly steepen. So steepening price action, we know increased volume, increased volatility. So we can say if we want to wait for the most volatile part of the bull run to start, when new highs are going to be confirmed, that is going to be upon a break of 48,000. Okay, bull run is not on yet. Macro uptrend is on. High time frame uptrend is on. The macro is looking strong. The bull run is not quite on yet. Let's go over and take a look at the total cryptocurrency market cap and of course altcoins. When will the altcoin rally start? And we're not talking about altcoins gaining 15%, 20%. We're talking about altcoins absolutely going ballistic. When will that start? Let's take a look at our prior data. If we take a look at our prior bull run, we saw from the bottom, the absolute bottom, okay, which is over here, until that first local high, we saw Bitcoin rally around 1,200%. On average, altcoins saw a pretty steep rally, but it wasn't nearly as much. We take the same date range, you can see as our lines kind of adjust. We can see on both sides as we move the date range, the lines adjust. We know we are on the same date. We saw an equivalent rally for altcoins around 600%. So from the bottom to that first initial bull run high, we saw Bitcoin massively supersede altcoins on average for rate of return. Now, it doesn't mean some altcoins aren't going to explode. Of course, there'll be a few outliers that do a significant more, and there'll be a few outliers do a significant less. But on average, we see altcoins perform generally less than Bitcoin from the bottom to the first high in the bull run. Okay, moving after that first local or large bull run crash, anyway or any amount higher upwards, that is when we see altcoins massively take over. So we take that first initial crash downwards, happens to be round over here, and we draw upwards. We can see from that first crash to the absolute high in the bull run, altcoins then take the dominance. They take the significance. That is when altcoins really start to rally. So when we look at altcoin season, we're looking for two things. We look for the total cryptocurrency market cap to be rising, plus Bitcoin dominance falling. That is when altcoins start to perform better than Bitcoin. So right now we are seeing Bitcoin dominance fall. We are seeing the total cryptocurrency market cap rise. So although we're not entering our altcoin season, we could very well see over the next few weeks altcoins start to outperform Bitcoin, altcoins start to gain a lot of percentages. As we are seeing, of course, like I said, total cryptocurrency market cap rise. We have seen a nice strong break over these local highs on the total cryptocurrency market cap, particularly this major neckline resistance. We're broken right above it. Okay, see, we've gone upwards. If this continues upwards, guys, and Bitcoin dominance rejects from this level and moves downwards, we are going to see altcoins start to rally. Again, Bitcoin will still move up, but we're going to see altcoins take some dominance over Bitcoin. So that money is going to flow out of Bitcoin and into altcoins, and we're going to start to see some rallies. But if you're looking for altcoin season, that will start in the bull run, particularly after Bitcoin has seen its first massive rally upwards in the bull run, and of course that first massive rejection. Then altcoins are going to start taking dominance. Okay, guys, let's head over to the Bitcoin chart once more on the high time frame, and then we'll finish up on the smaller time frame price action and discuss what's going on. So let's do some high time frame indicators. And sorry, today's video is going to be quite long. It is going for a while now, but there really is a lot to talk about. One of my favorite indicators of all times is the Gaussian channel for macro price action. We can see, we've been saying this for a long time. Actually, we've been saying since ever down over here. We've been saying ever since down over here since we entered the Gaussian channel. When we enter the Gaussian channel from the downside up, we generally push through it. Most of the time, we generally push through the Gaussian channel. Flips the trend. It's a strong indicator the trend is going to flip. And we can say the same thing about the top side. In fact, if you go back to our videos all the way back in December 2021, we were saying when we enter the Gaussian channel, we are most likely to continue downwards. This was one of our main trigger points, and one of the main reasons we thought the bear market was starting. One of the main reasons we were looking for 18,000. 20,000, because we entered the Gaussian channel. It signifies a massive shift in strength of the overall macro trend. But as we do from the top side down, we do from the bottom side up. It's exactly the same inverted. As we approach the Gaussian channel, and we break through the Gaussian channel, the probabilities we continue through it significantly increase. And again, we've seen multiple instances here on the weekly chart, and we can even go down to a daily chart and show you the same thing. So assuming we're going to continue through the Gaussian channel, where would the next resistance be for Bitcoin? Well, we're looking at this level right over here. We're looking at 31,800. That is going to be the next point of resistance for Bitcoin on the higher time frame chart. If we want to be a little bit more specific, we can actually say on the higher time frame, the next point of resistance for Bitcoin, if I go to this chart really quickly and we show you this chart over here, we're looking for resistance between that same point. So 31,700, we'll go ahead and slap it over here, and this local top over here, 33,000. So this is going to be the next point of resistance for Bitcoin on the higher time frame chart. This is by no means a macro resistance. The next macro resistance for Bitcoin is sitting all the way up over here at 40,000. Okay, if we look at the next macro resistance according to the VIPV, we can see the VIPV starts to drop slightly offwards, okay, as we approach upwards, and we can see the next macro resistance on the peak of the VIPV is sitting around 40,000 to 38,000. Now, I've said it once and I'll say it again. Volatility is going to start to drop. Volatility is going to start to drop as Bitcoin pushes above 30,000 towards the 40,000 range. We know that as the VIPV is starting to steepen. We can see it's an uptrend in the VIPV. This suggests that as we push upwards, we have increasing amount of historical sell orders, historical trades, and therefore more orders, more money, more resistance, more volume is required to push the price through. If we break above 40,000, we see the opposite effect. It drops down to that next top, which is 48,000, which by no surprise is that dotted trend line according to the 4-year cycle over here, guys. Okay, so if we start to push upwards, we're going to experience a drop in volatility. The total cryptocurrency market cap pushes upwards and Bitcoin pushes upwards, but we're experiencing more decrease or experience more resistance on Bitcoin chart. This could give way to the dominance falling. This could be an added bit of data that suggests altcoins are going to take some dominance and rally from the period between 30 to 40,000 for Bitcoin. So definitely something to keep your eyes on. Going back to that higher time frame chart, guys, before we go to the small time frame, again, a few other indicators we have been looking at. And again, if we do break through this $31,000 level here on the midline, we are heading upwards. Like I said, the next target is 40,000. We are heading to 40,000 for Bitcoin if we do break through that midline, through the upper band, of the Gaussian channel. A few other indicators we've been looking at, guys, is the Bollinger Bands. And again, we pushed quite aggressively on the Bollinger Bands. We're starting to see a strong trend develop. Generally, we have a strong trend when we hug the upper band of the Bollinger Band. You can see over here, as we hug these upper bands, it signifies increased volatility and strength. We know increased volatility because the distance between the lower and upper band increase, okay? The distance signifies volatility. When we have tightening, it signifies compression. Increasing, it signifies volatility. As the price is hugging the upper band, it signifies a strong uptrend. So we are technically in a strong uptrend now for Bitcoin. It is looking absolutely phenomenal, guys. Obviously, we're above the 200, above the 50, above the 300 moving averages. So we are above those major moving averages too. Let's go ahead and end up the video on the short-term time frame. How is Bitcoin looking on the short term? What are we technically looking like? Could we go higher? As you already know, guys, the next targets of Bitcoin, like we said, is going to be up in this range of a high time frame. However, let's take a look at the short term, let's take a look at the daily, let's take a look at what the technicals are saying, and let's see what is going on. So one of the technicals we were looking at over the last few weeks is the RSI. We did say the RSI was showing weakness, it was showing divergences, and we have officially eradicated that, right? We have broken above the RSI trend line, meaning that even though we had all this weakness on the RSI, we have officially basically said, to hell with that, Bitcoin is going up anyway, Bitcoin is going to break up, the momentum's breaking up anyway. So the RSI divergence has been invalidated, and therefore we're not going to be looking at on a daily anymore. In fact, what this now suggests is a RSI shift. It signifies a momentum shift upwards, which has been one of the reasons why we have continued toward the upside. Again, if you've been watching our videos, we've said, look for a break on that RSI for a trigger for a break past 30,000. We have seen that We had that trigger around 28 and we have pushed upwards to 30,000 as expected, guys. So short term, it is looking good. Daily, it is looking good. However, I'm gonna go ahead and bring the doom and gloom in one more time just to make sure everyone is very much brought down to reality. We do need to see a higher time frame close. Okay, if we do happen to push back below, whatever the chances are, if we push back below and lose 28,000, we will be heading back to retest 25.2 to 24.8. Okay, the probabilities are massively decreasing for any sort of pullbacks, and if these pullbacks do occur, okay, you have to be aware they are possible. If they do occur, the probabilities that new lows are in is almost negligible. You shouldn't be worrying about it. Okay, every single pullback, like I've been saying since here, every single pullback, every single pullback should be considered a healthy pullback until we start to break major structural levels. The major structural level we're looking at over here, as we pushed up to stay above, was 20,000. We broke above that level now, we validated that bounce, and now it shifts upwards. So the major level we're looking to stay above now is going to be 25.2. I'm going to end the video. Tomorrow we'll get into much more of the short term. I hope today's video was beneficial, educational, and you learned something. You got any questions, leave them down below. Join the Crypto Academy to learn how I trade. All the contact information down below. Send us email. You'll get the 10-unit course and so much more. Thanks guys for watching. See you.